So this is weekly commentary 54. Just a disclaimer, I'm feeling a bit unwell, so if you hear a few sniffles or coughs or my voice is, not the most pleasant, just a heads up, not feeling too great, but responsibility is a responsibility, and you guys need a weekly commentary. So let's go straight to the weekly time frame. So from the previous week, I said mark this level here, right? I said mark that level, and you want to see a protraction to it, and then perhaps move away from it. Now we didn't quite get that, and it was quite a slow week, right? Now going down to the daily time frame, right? I want you guys to have your chart annotated like this, right? So you have this low, right? And we have this high right now, and I want you to target this as a buy side liquidity, right? Now I'm still overall bullish on the DXY, but we need to consider a few things going into the next week. Now we had this accumulation, right? You see how it is looking like a barcode? It's going side by side by side, right? That's showing accumulation on the time frames underneath this. So let's say this was a 4-hour chart, and you see this going side by side by side, right? That means on the anything under a 4-hour time frame, like 1 hour, 15 minute, 30 minute, 5 minute, it's going to be an underlying accumulation. So on the daily, we have this. If you go on a 4-hour, on a 1 hour, you're going to see it's going quite sideways, right? Now, when we see price going sideways, what do we expect to happen? Manipulation, distribution, right? Whenever there is a consolidation, you have to ask yourself, what is it consolidating for? Now, if you go to the Forex Factory calendar, so we see Monday, Tuesday, there's nothing really. Now, Wednesday, we have the jolts. Thursday, unemployment claims. Friday, actual NFP. Wednesday, there's the ADP NFP. It's not the actual one, right? It's just like a measure of what to expect for NFP, but this is the actual NFP on Friday here. Now, looking at this, right, I want to speak on the Forex Factory calendar and red folders because I get a lot of questions and the same questions always asked. So I just thought, let me just clarify in this weekly commentary. What does this economic calendar show? It shows exactly what to expect for the pair you're looking at for the week. Now, let's look into context, right? First, we consider this, and then we consider this. It's always this to the DXY or and the pair that you're looking for essentially. Now, Monday, no USD. Tuesday, no USD. Wednesday, USD. Thursday, USD. Friday, USD. So what can you expect at the start of the week? Are you expecting, you know, the start of the week to have the expansion of the week, or are you expecting is it going to be an end of week expansion? I want you to split your week into two halves, Monday to Wednesday and Wednesday to Friday. Now Wednesday is in both the end and the start of the week purely because it's the midpoint of the week, right? And it's a carryover, right? Now Monday and Tuesday we have nothing. Wednesday, Thursday, Friday, specifically Wednesday and Friday, we have large news events, right? Now these red folders, what are they? Do you expect when this red folder drops for it to be an accumulation in the market to just accumulate? The red folders are where swings in price happen. Now, how do we translate that to, benefit us? It is either manipulation or it is distribution. It's not accumulation. It's either manipulation or distribution. Now, knowing that, your job as the trader is how and where does this make sense to place in the power of three for the week? And if this, because this shows us two things, right? It shows us the day of the week, which is Wednesday, where the event happens, and the time of day, which is 3 p.m. UK time, which is 10 a.m. New York time, where the move happens. So it tells you two things. For your weekly profile, it tells you, you know, that there's a folder on Wednesday. Now, depending on what Monday and Tuesday do, it tells you if this is likely to be manipulation or distribution. Now, the time of day, 3 p.m., given what the build-up of the day does to that time, which is the start of London close kill zone, you're expecting either distribution or manipulation. All you're doing is this: you're using the news, the red folders, and you're building the narrative with them. What has price done before? It was price manipulative before. If price was a manipulation before, then it's likely that the news event is going to be distribution. Vice versa. It's about piecing the news event within the framework of your power of three. Now, the three news events we avoid is this: FOMC, NFP, CPI. Those ones we let to build our bias. NFP is this week coming. Do you know how many kids blow their accounts? Because the people online, the fast money gurus, right? The ones that you probably saw before you joined this mentorship. What do they tell you? NFP or they put the titles, $1,000 or $10,000 trade on NFP, and it kind of entices people. NFP is to be traded because there's a large amount of money to be made. And you get the people saying, "Oh, I don't know why people are scared of NFP because they get it right, and their trading careers only lasted around 2 or 3 months, and they've been on the good end of the stick. Maybe they'll got it right for 2 times of their 2 month trading career. Do it for 2 years and tell me if you get it right for 2 years in a row, because the prop firms will slip you. Even your broker will slip you on NFP because it's just, it's a very large event, and you might not get the stop loss that you want because of a lack of liquidity, right? Now, for NFP, I say this to you guys all the time. And watch this as well from this weekly commentary, right? Make a note of this. The next week's bias is going to be way easier than framing the bias for this weekly candle. Let's go and see the weekly candle for the DXY. Just remove these because I don't want to clutter the chart. I'm expecting there's still to be a move higher, right? Watch this previous week's low though, right? Watch this previous week's low. If we take this previous week's low out early, expect, offset accumulation under this low, right? Now, given where the next week trades, right, with the NFP, whatnot, it's going to be very clear where the market is going to reach for. Now, right, let's go back to this. Does it make more sense and is it more viable, right, to waste your account on NFP or to save your account for when the market is clearer after NFP? Let NFP be a bias builder. Don't change your mind from, oh, I want to trade NFP to, I want to let NFP pass so that I can trade after NFP for clean next week. That's the mindset you gotta have, right? The news drivers are like, some of them are like bombs, and NFP is one of them. They clear, the blockade, and it's a lot more clearer after that. Remember, let a news event pass for a week's worth of bias is a very, very fair trade-off, right? Now, going back to this idea, right? Let's go to the 21st of Feb, if it goes there, right? Now, the 21st of Feb, what did we have for pound, right? We had these news events for pound, right? And I'll show you what I mean by this. If I go to the daily, this is the 21st of Feb. Now, that's a Tuesday, right? Now, we had that move pound into this PD array. Now, when you see early on in the week, pound move into the PD array with the news event, what do you think this news event was for? Manipulation or distribution? What do you think? And if it was for manipulation inside of a PD array and it was clear manipulation, because this was a bearish expected week because we expected a bullish week for dollar, what do you think is going to follow Wednesday, Thursday, Friday? Distribution. See, that's how you frame news, right? That's how you frame the news event. It's all about, is it going to be manipulation or distribution? And now, if you cannot sieve that out, sit and wait. Sit and wait. That's the only thing. Your job as a trader is always this. And I want you guys to make a note of this and drill this into your head. Every single time you open your chart, when you're intraday trading and when you're in your weekly profile, ask yourself, what phase am I of this daily candle and weekly candles power of three? For example, you could be trading the New York session. Me, when I'm a New York session trader, and this is going to be in your next lesson as well, which I'm going to make after this. I'm going to start making the slides after this weekly commentary. Every single day, I ask myself, I look at the daily candle and I ask myself from midnight opening price and whatnot. I ask myself, what phase of the day are we in? Are we accumulating, manipulating, or distributing? Because then I know what I'm looking for. Then I know, because if you've already started distributing, I'm going to look for continuation trades, right? Now, if we haven't distributed yet, and I can see the daily candle still reaching for a PD array before it's going to reverse, I know that I can set up either a move with the manipulation if it's viable, if there's space to move with it with a safe stop, or I'm going to hunt a New York midday reversal. That should be a light bulb moment for a lot of you. Every single time you're looking at, am I in the candles? It could be 4 hour, 1 hour, daily, weekly, whatever, open, high, low, close, right? If you're not into chapter 6 yet, that might be a bit confusing. You'll understand as you watch the lessons. What phase of the power of three are you in? And if you can get good at understanding and identifying that, you'll have a lot more success with your trading, right? Now, with the DXY, I want to go down to the 4 hour and show you guys something. Where was this run on stops made? Where was this breaker made? This market structure shift, monthly fair value gap, right? Now, I want you guys, and this here is an entire model. I want you guys to screenshot this, right? Or I know you might not be able to screenshot. Take a picture of your phone or something, whatever it is, right? Just take a picture of this chart, right? And I'll maximize the screen, right? Let's talk about this for a second. I want to focus on this for some part of the weekly commentary, right? You see, when let's say this is a 5 minute time frame and this is a 4 hour fair value gap. When we see this, and this has to be made in a high time frame PD array, it has to be. If it's not, then or if it's not from running sell side liquidity pool inside of a bullish bias, essentially when we're in a bullish narrative, this market structure shift has to come from running sell side liquidity pool or from a discount PD array. When we see this and we see that expansion, we break that high, you're automatically thinking about trading towards the premium of this range and targeting this buy side liquidity pool. All these consolidations, right, and the retracements lower are a chance to get in with the move to the buy side liquidity pool. Here, right, not too much offered, you know, into this daily order block. This is a daily order block. We'll touch on that on when I go through the weekly recap and the move higher. Now, I'm favoring this buy side liquidity pool to be taken first, right? I want to see the move into that buy side liquidity pool. Hence why I'm bullish on the DXY. And now you see on the 4 hour, we're inside this order block, fair value gap, right? See how Monday trades off of that 4 hour this discount PD array, this fair value gap coupled by this down close candles or order block. And I'm assuming, and I'm favoring upside over the downside on the DXY, and this buy side liquidity pool is the target. Now, this on a 15 or 5 minute time frame, essentially your market maker buy model. This is all you need. This is everything you need. If you're seeing this, right, and you're seeing that from here, you're just protracting, manipulating down. All this move is manipulation. Manipulation isn't just this move, it's from here all the way to that PD array. From the start to the PD array to the like where the reversal point is, that's all manipulation. Now you're working your way back up to that buy side liquidity pool. That's a whole model. That's all you need, right? And now this as well. A lot of you guys are losing yourselves to stupid stop losses, right? That's the theme that I've got from the you guys trading demo and your funded accounts. You're taking stupid stop losses. A lot of you trade this breaker, and that's a pattern I like as well, right? That's a model I like. That breaker block, enter, especially if it's coupled with a fair value gap, but you guys are putting your stop losses here. Why? Why are you putting your stop loss inside of a PD array? PD arrays get traded to. The breaker isn't the end or be all. It could, wick down into this fair value gap. It could trade it into this order block. You have to put your stop loss somewhere where it's safe. Now listen to this piece of advice I'm going to give you, and it's advice I wish I heard years ago. A safe stop loss is going to save you so much money. I know you guys want to make good risk to reward, but I'm telling you guys, 1 to 5, right? A 1 to 1.5 or 2R, 3R trades, 2.5R trades, whatever, is all you need. And you need to focus on winning the trade, right? What good is a 10R trade if you're never going to win that trade? Are you ever going to see 10R or 6R or 7R or 8R or 20R, what these guys online say they get every single trade? No, you're never going to see that. Your number one priority is this, is winning the trade. Now, you can have a good entry, right? But your stop losses are letting you down for some of you, right? Because your stop loss will get hit and it will go deeper into the, maybe deeper into the OTE or premium or discount, and then it will go your intended way. But you didn't account for where price could trade to, inside, because your stop loss should go at this low, right? If you enter at this breaker, your stop loss, it should go underneath at the bottom of this candle. Yes, you'll take a bigger, stop loss, but that's what you sign up for when you start taking that model. The thing is though, you're gonna get, and listen to this. This is where you dial in, yeah. You see every single swing high to low, yeah. So this high, this low, sorry, to this high. It has PD arrays in it. The PD array matrix is just the structure of the range, right? Remember, from the top you have the low, then the rejection block, then order block, then fair value gap, mitigation block or breaker block, and then you go to the discount of the range, right? You have a breaker block or mitigation block, fair value gap, order block, rejection block, old low, right? This low to this high, right? Split 50%. This is the first, you know, bullish PD array, fair value gap, order block, old low. It's always that order. Every single high to low. Look, high to low. You'll always see it. Every single high to low. Then a new high to low is made. This low to this high. You'll see the PD arrays are always like that. Now look at this, right? If you want to work off the breaker, you're going to get a lot more trades if you trade breakers over perhaps maybe rejection blocks, because rejection blocks are at the bottom and the top of the PDA matrix. Now the risk to reward on those might be better because remember, the closer you get to the old high or old low, that's where your stop loss is going. So the closer you get there, the smaller your stop is. But one thing you have to consider in your system is this: how often is it offered? How often does it get to the rejection block? That's why I take fair value gaps. Now listen to the magic of fair value gaps and why I take them. And this is something I realize over a lot of time when I start to think more logically and I start to think of it like this, right? Fair value gaps are where in the PDA matrix? Middle. They're in the middle of the PDA matrix. Now, the middle is usually more likely to be offered than the extreme ends of the range, right? If you have just a sample of data, the mean threshold, which is the fair value gap of a PDA matrix, right? Is it more offered than the two extremes, right? The two extremes. If you're a statistic person, the 50th percentile is way more common than extreme values. If you look at a bell curve, I don't know if you guys do stats, what's the middle, the mean threshold, the middle of the bell curve? And then you have, the flat ends, which are your extreme percentiles, your 1 to 5% and your 95 to 100%. They're not really offered as much, but the mean threshold is. So if you take fair value gaps, because it's usually in the middle of the range, you're going to enter a lot more trades. Now, your fair value gap's not going to give you the same risk reward as an order block, but the volume of them makes up for it. Like the volume of the breaker block being met is going to make up for just relying on an order block, even though the risk to reward is less. It's about taking that trade a lot of times in a row, that same trade. That's something you guys have to consider, right? The deeper you try to get into the PDA matrix, yes, your stop loss is going to be tighter. Yes, right? But is it always going to get there? No, it's not. So remember, bear that. I want you guys to really bear that in mind, right? Now, just to recap what we've gone over so far, I'm expecting this buy side liquidity pool to be taken. I want you guys to, consider this order block as well. We traded down into it. We moved away displacement. I wanted to see Friday continue on, but what did Friday do, right? Friday was what? If we go to from Monday, Monday took this candle's high, Tuesday took Monday's low, Wednesday took the low, Thursday took the high. What did Friday do? Did it take a high or a low? No, it never. So what does that mean? What is Friday? It's classed as an inside candle. Now, what does inside candle mean? The high or the low hasn't been taken. So has there been any manipulation or distribution? Because no liquidity has been taken on this daily candle chart, right? That's accumulation. Now, what do we have? We have quite an insane week coming with NFP. So if you start to see more inside candles and the daily ranges are starting to get smaller, like you're starting to see the candles compared to these candles are getting smaller, wait, right? That's your sign to wait, because that's accumulation. We don't trade inside accumulations. We try to wait for manipulation, right? We try to wait for manipulation. Now, manipulation isn't always one move. You guys have to realize, right? Manipulation is not always one move. Manipulation can be a few candles to trade back down, maybe to the 50% of this range, right? I want to see this order block hold, preferably though. I don't mind if we go down a bit deeper into it, sweep this will be the previous week's low. Maybe we could come to the mean threshold of these two candles together and then, target this buy side liquidity pool, right? I'll try my best to help guide you guys throughout the week on the Telegram group chat. But I am quite unwell. I sound not too bad right now. I'm pretty drugged up on ibuprofens to get me through the day for this weekly commentary. But I'll try my best to navigate you guys on the Telegram group chat. Right, let Monday pass and let's see what Tuesday, Wednesday does for this week. Now, because I can't do the weekly report just because I was quite busy last week, let's go and touch on what happened throughout the week. So, Monday, Tuesday, Wednesday, Thursday, Friday. Old school weekly commentary style. Right now, we expected, remember, if we go to the weekly chart, let's put the line on there. this is the 50% of the previous week's candle, right? Now, I expected Monday to and Tuesday, I wanted to see protraction into it. Now, when we see Monday trade down into it, and we see Tuesday, you see that market structure shift, right? High, run Monday's low, right? We ran Monday's low and market structure shift. I'm expecting Wednesday to kind of continue on. Now, it didn't. It didn't do that. I understand. 10 out of 10 times till the day I go into my grave, I will expect that to continue on. I would expect it every single time. That's just something that your system incurs. I can't do nothing about that. You're gonna incur that, right? Now that threw some of you guys off, and you might have thought, "Oh, bearish, bearish." Never think that. Never make a decision out of being flustered. Okay, it didn't go your way, but where is price right now? Where is it going, right? Now you see Wednesday tapped into the what's this? The daily order block, right? And we moved away higher. Now remember this, right? Look at this displacement away from the 1 hour time frame, right? And you get this, you can see that this is a swing low. Now, when you see this candle's made and you're moving away from this candle's low now, this is a rejection block. When a bearish rejection block is made, right, you're expecting, price to expand and make the range and make a new high because this is a swing low now, right? Now, think of that idea, 4 hour swing low made inside of a daily, if I move this, a daily order block. Where do you expect the next daily candle to print, right? Look at the time frame you're on. You traded into a PDA rate on this time frame and you found rejection. Now on the 4 hour time frame, a time frame lower than this, you saw that a swing low, 3 bar swing low was made with displacement. Where do you expect the next time on this time frame then? When do you expect the next candle to print? Away from the PD array. That's why on Thursday I said I was bullish, and on Friday I said I was bullish as well, and we got stuck in an inside candle. And I said very early on around, before New York, I said it's going to be an inside day. Just leave your chart because this, right, when you open up close to this previous day's high, you should, magnetize towards it and take that out. But it didn't. It was, it traded here and then it started going down. When I saw it traded up higher here and then start going down, what's the chances of it taking the previous day's low? Very unlikely, right? It should have took the previous day's high and then at least came back down and consolidated inside. But it didn't do that. That's how you can tell it was going to be an inside day, right? Um, So that's pretty much it for in terms of weekly recap and weekly commentary. I'm expecting a bullish DXY, that buy side liquidity pool market. Remember, mark the chart how I marked on the daily and work on that market maker model that I told you guys to take a screenshot of on the 4 hour. Find examples of that in 15-minute time frames. Just remember the SMR has to be made after running stops or in a premium or discount array. That is the criteria, right? Now, one thing I need to touch on with you guys is the idea of divergence, right? So we know that we have correlating asset classes, DXY, Euro, and Pound, right? Now, this is going to be perfect, right? Because we have this example from Pound. That's Euro GBP. On the 21st of Feb, now you have to use the same dates. And you have to, if you're using a 50-minute time frame, it has to be the same times. You can't use different highs and lows. It has to be the same highs and lows. So on the 21st of Feb, we broke the previous day's high. And remember, this is a bullish, we're expecting bearish market for this, and we're expecting bullish DXY. We were traded and we broke the previous day's high. Right? We broke the previous day's high and we went into a PD array. 21st of Feb. Euro, 21st of Feb. We didn't take the previous day's high with pound. Now the DXY, we didn't take the previous day's low. Remember, run on the previous day's low for DXY should be the run on the previous day's high for pound as well. Now what does it show? Pound ran buy stops. Now, if Euro didn't run its high, right? If Euro didn't run its high, which one of the two do you think is weaker and prime for shorts? Because remember, you're trying to long DXY. Pound ran buy stops, right? And Euro never. So which one do you think you should be trying to short? Which one is the weaker one? Which one do you think is going to fold easier? Euro. Otherwise, it is the one that diverges. You don't want to trade that one that diverges. You want to trade the one that is not cracked in correlation. Pound, leave pound. Pound is strong. You're trying to short, right? If pound ran buy stops, it means there's underlying strength inside of it. Trade euro, right? Now, again, let's say you're bullish on the DXY. Let's say you're bullish DXY, right? And you see that, you know, every single time euro makes a higher high, right? So your long pound, let's say that, you're making a higher low on a euro and you're making a higher high on pound. What does that tell you? That pound ran biceps, but it's pretty strong. It's diverging away because you know DXY is going higher, right? So euro and pound should be making what? Higher lows, right? Now GBP USD makes a higher high. Euro USD makes a lower high. Which one is the weaker one out of the two? Euro. Trade euro, and it tells you that because its neighbor pound ran buy stops, you can expect that move lower for euro, right? So that's just to touch on divergence. I don't have an example here. I'll try and gather some examples and put them into a PDF format for you guys to study it, right? Um, it's kind of hard to measure divergence if you don't have a double screen monitor, right? Or, some of you guys might have this. If you don't have a big enough monitor, this will be also quite, difficult to kind of follow, right? But that's how you can do it. You have to, like, how you have this low and this high, you have to exactly mirror it with a low and a high as well, right? I'll try to find examples and send it to you guys over. I'll try to get doing that after I finish this commentary, actually. So remember, for divergence, you have to use correlate classes, right? So euro and pound together and the DXY. The DXY is your measure if you're long or short. Like if you're bullish DXY, then you should be looking for, lower highs on euro and pound, right? Now, pound makes the higher high, euro makes that lower high. It shows you that there's divergence going on. And let's say that they're at, premium arrays, right? Let's say that premium arrays make it even better. Pound and euro are at premium arrays, and pound runs a high, and euro doesn't. Which one do you think is better for the short? Which one is weak and more likely to fold? Euro, right? Because pound ran its high, so it shows there's underlying strength in it. So trade the euro, and you know that drop in euro is gonna come because pound ran its buy stops and DXY is overall bullish, right? So that's gonna be it for this weekly commentary. Um, Given that I'm getting better, I think I should be better in a week, hopefully, right? I don't see myself being ill for too long, just a flu. Back to normal, weekly report Saturday, weekly com on the Sunday. I'll try to help you guys throughout this week as well. Remember, exercise your patience. Wednesday, Thursday, Friday. If Thursday is going to be quite slow and choppy, don't trade it, right? If by New York is quite slow, just leave your chart. Friday, don't even bother. Don't bother. Don't do it to yourself, right? I'd be quite ashamed, and you should be quite embarrassed if you fall victim to a gambler's mindset on NFP, given we've seen it for over a year together now, right? So that's going to be it for this weekly commentary, and until the next time, I'll see you guys in the next one.